detail. I want to check that out.
Nice.
Yeah.
Okay, we live in like 10 seconds.
All right.
How's it, guys? We're just gonna wait a couple minutes until a few more people join, and then we'll get started. So we're looking to start around about, in 5 minutes here, just to make sure a few more people join. So stay tuned. The news only comes out at 10 Dubai time, which is at around about 13 minutes. So just stay tuned until then, but we will start in the next couple minutes.
Like, we only got 2 people?
Yeah, at the moment.
Hopefully Sonia is one of them, right?
Yeah. Bitcoin hasn't done much today in terms of...
Yeah, very muted market.
Yeah.
Yeah, everyone's just like the Nasdaq is the same. But did you see the Dixie? It's actually down like 0.6%.
Really?
Yeah.
26%.
Not 20. I said 0.6. 26% would be crazy.
Yeah, I was about to say something happening. Let's see. Oh, that's interesting. The Bitcoin doesn't react to the dollar anymore.
Yeah, like the correlation isn't really there anymore.
Yeah, it's terrible. Yeah, we're just gonna wait a couple more minutes, because there's obviously not enough viewers to get started. So just stay tuned and we'll get going. What are your thoughts on the dollar, like in terms of... I was looking at it earlier and it looks quite bearish to me.
Yeah, yeah, like I said, it's down like 0.6%.
Yeah.
But we're not seeing like that reaction that you would expect to see in Bitcoin or the Nasdaq 100.
Yeah, exactly.
Is gold up today? So I would imagine if the dollar is down that much, gold could be
No,
up.
gold actually, I took a nice trade on gold today. It went up when the PPI data came up,
Oh, okay.
and then it's actually coming back down. But yeah, it looks good. I think a lot of people are looking at the 2000 mark for a potential retest, but I think that's within the next week or two. It's nothing too crazy.
Mm-hmm.
Yeah, we're just gonna wait like 1 more minute here and then we'll get started. And yeah, obviously at the end you can always re-watch the stream as well. So it will be on my YouTube. So Bitcoin is coming up a bit. I think it always does this, like
Yeah.
pre-markets run up and then comes down. I think like 5 minutes before we're gonna see quite a lot of volatility because this is a very important FOMC meeting, I think.
Are you gonna have agri trade pulled up?
Yeah,
To see all the big buyer sell orders coming.
I've got it up at the
Okay,
moment,
cool.
yeah. Okay, I think we can get started. So first of all, I just want to say, how's it everyone? I'm Dylan and welcome back to my YouTube channel. Today, we have an incredible lineup of experts who will be delving into the FOMC meeting and its potential impact on the crypto market. So joining me, we have Boris, the master of market analysis, and Eric, the trading guru. So together, we'll explore how this decision can shake up both the short term and the long term. It's going to be a very important meeting, so make sure you stay until the end. The FOMC statement is released by the Federal Reserve after each meeting, providing updates on the economy and the future monetary policy. This information is important for the cryptocurrency market because it can influence the value of cryptocurrencies. For instance, if the Federal Reserve increases interest rates, investors may move their money from risky investments like crypto to safer options like for bonds. Conversely, if the Federal Reserve signals a commitment to lower interest rates, investors may be more inclined to invest in risky assets like cryptocurrencies. So before we dive into the pre-market data, I'll pause for a moment to allow our guest to formally introduce himself. Boris, can you start?
Sure. Hey guys, and thanks Dylan for having me on your stream again. My name is Boris Friedman. I'm a copy master and analyst for CoinW. Previously, I was a full-time trader for my own firm called Boris Digital Capital. Before that, I worked in alternative investment research at Preqin, doing hedge fund research. And before that, I was more in traditional finance, doing financial analysis at Bloomberg. And I'm really happy to be here and really excited to join you guys and have a great discussion about the Federal Reserve meeting. On to you, Eric.
Thanks, Boris. Hi, guys. My name is Eric, and I've been trading the crypto markets institutionally for about 4 to 5 years now. Really happy to meet you guys. But for today, the Federal Reserve is anticipated to halt interest rate hikes, bringing an end to a series of 10 consecutive increases and representing a significant shift in policy that many have been eagerly awaiting. So for equities, we've seen decent gains today. Bond yields also have decreased, just ahead of the Federal Reserve's decision on interest rates. Again, a temporary halt in rate changes is widely anticipated, but Powell is likely to indicate that such a pause is necessary to assess the delayed impact of previous tightening measures. This keeps the possibility of additional rate hikes open in the event that future data suggests rates are not restrictive enough. So I think for today, we're seeing a little bit of pre-market action in anticipation of the announcement. So we're seeing BTC right now, currently above 26K. Could see a little more up move, but ultimately, I'll open it up to you guys. What do you guys think?
Yeah, I mean, thanks so much for joining me today on my channel. It's always nice having you guys here again. Like last time, obviously last time the FOMC meeting wasn't, we anticipated more of a move. But I think today we might see a bigger move due to, the current situation of, the economy and what's going to happen and what Powell's tone is going to be. So I think the most important part is when actually analyzing the FOMC, we need to wait until he actually starts speaking. So that happens in around about 30 minutes after 10, Dubai time. And we'll actually watch him live and comment on what his tone is going to be for the upcoming weeks. And we do have a couple of charts that we're going to go through to show you the probabilities of it being going up, down, and sideways after the weeks of the FOMC. So make sure you stay tuned until the end because it gets very juicy in terms of what we're going to discuss. But yeah, Boris, what are your thoughts when, normally what happens before FOMC in terms of the market?
Yeah, so usually, well, first of all, we see a lot of just kind of sideways action as a lot of traders close their positions or at least de-risk their positions. And and a lot of people are just waiting for the announcement to come. And then usually what I've noticed is that we get some kind of a fake out move, either up or down in like the first minute or the first 5 minutes. And then we get more of the real move happening after like the first 1 to 5 minutes. But then later at 2:30, when Powell begins speaking and he makes some commentary about his future outlook of the economy and possible future rate hike decisions, that's when we get even more volatility. So yeah, it's a really exciting day whenever these meetings happen. And what's interesting about this meeting is that, so the past 10 meetings, the Fed actually kept hiking rates, but for this one, it is highly expected that there will be a rate pause. So I'm really curious what will happen, because it's going to be the first time in over 10 occurrences that there will be a rate pause. So I'm curious how the market will react to that.
Yeah, so I've actually got that chart open. Boris actually analyzed the past 10 meetings. So you can see on the chart now, there was 3 out of 10 times a 30% chance of it going up after the FOMC meeting. So this is 1 week after the FOMC meeting for 10 times. And there was a 40% chance of it going down and a 30% chance of going sideways. But because of the halt of the rate hike, it will be a bit different. So it's going to be interesting to see what's going to happen. So there is around about 2 minutes until you can see right now Bitcoin is actually going up a bit. That was a level, that 26,070 level was the level that we're looking at for resistance. So if we take a look now, you can see there's a lot of orders coming in right now. We'll actually move this up so we can see if there's a lot more bigger orders than what we were seeing earlier. So if we have a look at Bitcoin on the chart here, we may see that 26,300 level get tapped into, because that is the current resistance. And obviously if we break past that, we might see further increase. But normally with FOMC and CPI and all these news events, we do see a lot of fake outs, like Boris was saying. So let's keep an eye on the 30-second chart, because it's always fun to take a look at this chart.
Yeah, now we got like 1 minute to go. So let's see.
I mean, if you look at the chart now, like on the 1 hour, it's basically just a doji. So it's going to be interesting to see what's going to happen here.
We got like 30 seconds or so, maybe less.
Less than a minute.
There's 10 seconds. Okay. Yeah, so here it just came out. Let's see.
Okay.
So the market's reacting a little bit here to the downside. Nothing too crazy. Here we go. Here are some orders coming in.
Yep.
Oh, there it is.
Nice.
So let's actually see.
So we're going down initially.
Down, yeah.
Yeah.
Again, though, I think intraday on the hourly, still a lot of range. Seeing right back up. So
Starting to go back up now.
yeah, so the thing is that, of course, in these scenarios, people tend to, as Boris said, be risk off. And essentially, they'll take liquidity off the books. Instead, they'll take liquidity when possible. As a result, you could see very wide price movements because of that spread, since people are just, taking their liquidity out. I think the price is very erratic, and a lot of people tend to not really buy into these kind of events so soon, simply because it's not really a good environment to put on risk, in my opinion.
Exactly.
Yeah, so yeah, the FOMC leaves rates unchanged as expected. So no surprise there.
5.25. Okay. Yeah, obviously.
Yeah.
The thing is, you won't really know what's gonna happen yet. Like if there was an increase in rates, then you can kind of predict what's gonna happen. But because it was, a halt, that's what's interesting. That's what it's nice to have a look at.
Oh, take a look at the NASDAQ. It's really kind of dumping right now.
Let's have a look. Even gold. Yeah, gold's dumping hard.
Let's see what's happening with the dollar too.
Let's check the NASDAQ.
Yeah, sell off right here.
Yeah.
Oh, the dollar went way up. Look at that 1 minute candle. That's crazy.
Let's have a look at the dollar. So this is when the time that they correlate to one. Oh, sheesh, yeah, the 1 minute's crazy.
Mm.
Yeah, 0.3% in 1 minute. That's insane.
Right.
Especially for the dollar. Like for crypto, like a 1% gain in 1 minute's not bad, but for the dollar, going up 0.3% in 1 minute is crazy. Yeah, Bitcoin looks like it's coming down a bit. I mean, it's probably just in a range.
And not really much happening with Bitcoin, it seems.
Yeah, it's more the
The
Nasdaq.
NASDAQ, yeah, NASDAQ's having the volatility and the dollar.
We might see Bitcoin follow like what the Nasdaq is going to do. So it's quite interesting to take a look at the Nasdaq as well. The Nasdaq has been in an uptrend though on the 4 hour, well, and the daily and the weekly, I guess. But Bitcoin looks bearish though. I mean, like, hard to say now, but it's only been 3 minutes after the news. But it did break the lows on the lower time frames.
Yeah, I mean, it's been looking bearish ever since the SEC decision, or the SEC's actions last week. So, not really surprising.
Yeah, I mean, well, once we broke that 26,300, I mean, it was an easy area to short from.
Yeah, and like both the SPY and the NASDAQ are kind of having a significant downmove comparatively
Oh,
speaking.
check the Nasdaq now.
Yeah.
That's crazy.
Seems like there's
Look-
more downward pressure at the moment.
Look at the 1 minute.
Definitely.
Oh my god. Yeah, that's crazy. Bitcoin reacting. Yeah, it is now.
Mhm.
Oh yeah, now it's starting to go down a bit.
A little bit. Yeah, there it is.
25.8
Mhm.
now.
So we're going back to 20K, eh?
What's interesting, that I'm looking at some of the altcoins. Uniswap is actually up 7%
Uniswap, that's interesting.
today.
So let's have a look at the altcoins.
Yeah, a lot of these altcoins have gotten slammed recently because of all the SEC allegations and lawsuits. So eventually, people are going to, take their profits if they're short futures. At the same time, support's always got to come in somehow and step up. So, this event today could be that catalyst for a rebound in altcoins, not necessarily in Bitcoin.
Yeah. I'm taking a look at the total too. So basically, this shows us the altcoin market cap. So it's every coin excluding Bitcoin, and you can see that it is getting rejected here. So this could, I mean, the next couple of weeks could be very bad for the altcoins if it stays below this level here that's on the chart. So
Yeah,
it looks very interesting.
I mean, ultimately,
Yeah.
Go ahead, Boris.
Do you guys think there would be like a rebound in the altcoins just because they're like so oversold? I was expecting kind of like it's kind of some kind of relief rally, or do you guys think it'll just keep going down?
I think altcoins are going to follow the majors in this scenario, right? If BTC obviously cannot sustain above, intraday lows, maybe 25.6K and see a sell off, then I think people are definitely not inclined to hold their positions in altcoins, and maybe even further sell off, unfortunately. But of course, that depends on how Bitcoin performs. Right now, we're at 25.8K. I think I'm leaning a bit bearish for this particular event, just so because people are inclined to sell on the news for today. But I think consolidation in the near term is more likely.
Yeah, I mean, we're definitely going to see a 25, 600 retest, I think, within today.
Do you guys have any positions open right now, or are you guys just flat?
Flat, just simply because of the spread, and I don't want to really, get run over like that.
Yeah, I mean, I don't really hold trades for more than 2 hours, so I'm not in any position. And yourself, Boris?
Yeah, I actually got a few. They're mostly like swing positions,
Okay.
and they're mostly based on the daily time frame. I'm short on Ethereum, on Bitcoin, a couple others.
Nice.
I'm short on XRP, and yeah, I don't really think like whatever happens that Bitcoin will suddenly pump out of nowhere. So
Yeah.
that's what I'll just
Especially if
maintain my
it's not
positions. Yeah, and the positions I do have, they're very low risk. I'm not using very high leverage or anything. So if I do end up getting stopped out, it'll be a small loss, and that's okay. I'm comfortable with that amount of risk that I currently have.
Yeah, exactly. Yeah, Bitcoin is coming
I've
down a
seen-
bit now.
The
Yeah.
Nasdaq is really just it's really coming down now.
Yeah, even
Down
gold.
over.
Gold is dropping so much. I was actually short
Sorry,
on
yeah.
gold.
XRP is really dropping too, down over 4%.
Let's have a
So
look.
my short is looking good so far on XRP.
That's good. Yeah, XRP is dumping. It had that massive like 7% pump, then it just
Very nasty shakeout.
Yeah, apparently it was just due to some news about it was some fundamental news about their SEC lawsuit. I didn't really read too much into it, but I know I think I posted you guys like a trade setup for XRP where I was going short. So I actually did get stopped out, but I chose to re-enter just based on that like fake out to the upside. And now I think we're gonna actually have that move downwards that I was initially expecting.
Yeah, I think for XRP in particular, for this example, to me that move to 0.55, 0.56 even, it's definitely a very nasty squeeze. A lot of people who are short probably got hit with their stop loss there.
yeah, definitely.
And that honestly might be stop losses, honestly, that move. But I think a good opportunity to re-enter is if price rallies back to previous resistance at 0.53, 0.54. I think that's a pretty good risk reward entry there. Also, simply because I think it could be potentially a right shoulder for me. So, of course, you want to nail the highs as much as possible. I think XRP still, there's nothing super special in the fundamentals. So, there's not much insider buying going on. So, I think playing range bound for XRP, definitely short in this case is the safe decision.
Yeah, I agree.
So,
Yeah. If you actually zoom out on the daily for XRP, it looks kind of like a double top. that we
Yeah,
just
definitely.
formed.
Yeah, even a triple top.
Or yeah, maybe even triple top, quadruple top.
Yeah. Yeah, that's a good area to take a short. Yeah, that
definitely
was,
heavy, but yeah, if you know, in the coming weeks we see XRP clear above 0.53, 0.55, and then retest 0.53, I think that could be a potential long entry too.
Yeah.
Just to say that the range has been decided that previous resistance will be now support, and then we could play long from there. But in the meantime, range bound otherwise, in my opinion.
No, I agree. I mean, it's a retest trade. Retest trades are obviously like I love doing those trades. But yeah, have you seen Bitcoin dominance? It's quite interesting. So I'm looking at the chart now. It's been on the 1 minute. It's just been going up and down like crazily. So,
What are you guys' thoughts on Bitcoin dominance overall?
Last I checked, it was around 49%. It really doesn't fluctuate much, in my opinion. What do you guys think?
I think, I mean, the weekly candle closed above the range high. What on my chart, like my range high is at 48.9, and it closed at 49.14. So like the next level really for the dominance is around about 50.17. So I think that could be a potential area where. So that's why I'm still thinking that altcoins can bleed a bit more, because if we see price, if we see price going back up to the 50% range, we're gonna see massive drops. Like for Solana, I mean Solana's already taken a massive hit, and a few other coins. Like for example, I think I was looking at Chainlink. Chainlink still has such a big way down. So because most of these coins have broken their support, so it's quite interesting. Solana, looked at Solana lately, so it's on the weekly time frame. It tapped into that 13, that $13 to $14 resistance, and it's bouncing. But if it breaks that zone,
Yeah,
I mean the next
it's
level,
not good.
yeah, it's not good. I mean, it could go back down.
I'm
to
curious,
$1.
what do you guys think in terms of like all the SEC labeling all these coins as securities? I guess that would involve some fundamental analysis.
Yeah,
But I'm curious from your perspective, like would these like pass the Howey test as like being securities? In my opinion, like a lot of these, I don't think these are securities except for a few, like probably BNB
yeah,
would be a security in my opinion.
Yeah,
But like I don't know about the others. Like I don't know why they listed Filecoin as a security because it's been around since like 2014. So 9 years later, they're now labeling it as a security. It just doesn't make too much sense to me.
but Bitcoin's coming down a little bit. I mean, it was a bit. This FOMC meeting is a bit better than the last one, but I mean, there's still Powell speaking in 16 minutes, so that's obviously gonna.
Yeah, I think that's gonna really drive direction. I'm
Yeah.
really curious what he's gonna say in terms of like future rate hikes.
Exactly. And if you guys have any questions, make sure you put it in the comments. And also, I want to go over while we wait for. I mean, at the moment, the market just looks like it's ranging a bit. I do want to go over the CoinW app, so you can see that we have Boris, which is at the top on the screen here. This is his copy master. You can follow him, and he's more of a long-term trader. So he holds trades for 1 to 2 weeks, sometimes days. But yeah, he's very good at hedging his positions. And then we have Eric. Eric's more of a short-term trader. Am I right, Eric? Or of a swing
Yes.
trader. Yeah, so he's more of a short-term trader. Risk management very good. And yeah, so these are pretty much all of us here. I'm also more of a short-term trader. I don't really hold trades for more than 2 hours. I try to do 5 to 10 trades a day, depending on the market. But yeah, so these are pretty much. So I'm on the right, Boris on the left, and Eric in the middle. So if you want to follow us and you're not sure how to trade, you can definitely pick one of us. And obviously, it depends on your strategy and how you want to earn money within the coming months. So you can have a look at our profiles. You can, if you actually click on myself, you can go to the order history and you can actually see all my orders within the past couple of weeks. So you can actually carry on going back. You can see there's 33 pages. So yeah, you can go have a look there. And yeah, if you like the look of one of us, then make sure you follow us.
Yeah, I would say to diversify between all of us, just because we have like such different strategies. So you can diversify between like me, who's more of a swing trader, and then Dylan, who's really great at scalping and short-term trading, and Eric as well, who's really good at short-term trading and risk management. And that way you're well diversified between like 3 professional traders.
Yeah, exactly.
So yeah.
Yeah, at the moment, I mean, the market is just still. I think it's more bearish than bullish at the moment. Just looking at. Obviously, we have to look at the lower time frames now because it hasn't been an hour yet. So.
Yeah, we still have about 15 minutes to go before Powell starts speaking.
Yeah.
I think people are just waiting for that.
Yeah, if the 1 hour candle closes below 26,800, I do think we can come back down to that 26,600, 26,500 level.
Well, how about after that though? Like, let's say price continues to press. I feel like there's a large amount of support waiting at 25,000 for BTC. I think that could be possibly a reversal opportunity for a lot of alts to kind of catch a breather from getting smashed. So perhaps 25K will be that kind of safe zone where people are going to be like, okay, I'm going to put more money into cryptos here.
Yeah, I mean, I was looking at for Bitcoin around about 24,500 because
Mm-hmm.
I do think like obviously 25K is the level, but 24,500 if you look on the 4 hour and the daily, that's where the candle is actually closed. So I would expect at least a wick into 24,500
Yeah.
before we see price go up. So I might even place a limit order just at that zone. But yeah, I don't think, I think we'll definitely get a bounce. I don't think we're just gonna break straight through it. At least retest it
Yeah,
like 2 to 3
yeah.
times. Yeah.
My perspective is like we did like kind of like tap. We went down as low as 25,350 or so.
Yeah.
So I think maybe people actually front ran that 25K level. So
Yeah.
I actually think like a different perspective could be if we actually wick below 25,350. I think we might just like completely just like smash through that level just because a lot of people are like buying that level.
Yeah.
I don't know. I would probably watch out for that. 'Cause
I mean, yes, I could see that scenario happening too. Just seems like, whenever we want something to happen, the opposite happens, right? So
yeah,
I think
I've just been hurt so much just trying to catch a falling knife that
yeah,
I'd rather just be short here rather than trying to, I don't know, time where the bottom might be.
we're still in a range long
Yeah.
term for BDC, so anything could happen, and preferably just stick to the trend line, play alongside
sure.
that. Yeah.
I'm curious, did you guys take a look at the Bitcoin CME chart, the Bitcoin CME futures chart?
Yeah.
Because it doesn't include weekend data, obviously,
Yeah.
because CME doesn't trade on the weekends. And I'm just curious what you guys think on just like the overall pattern on the Bitcoin CME futures chart.
I know this week we did fill, I think, halfway up. Let me actually put it up.
So I think you can almost like draw perhaps like a falling channel kind of pattern. I don't know if you guys are seeing the same thing. So it looks a bit different from the spot chart.
What's the CME chart called again?
So it's BTC1 and then exclamation point.
So yeah, I would say it definitely looks bearish. Well, maybe a little more continuation. So maybe we were right. A retest of this 25 area is very much likely in the sights for the coming days, based off the weekly, right? I think the fact that we are under previous short-term support at 26K. Right now we're at 25.8 for the CME futures chart here. So I think a testing of at least the level that Dylan suggested, 24.5 as a wick, is a very likely scenario in my opinion.
Yeah, I mean, I've got the CME chart open now, and you can see if on the chart we did fill that whole range. So normally, like I think it's 90% of the time Bitcoin does fill the range. Obviously, it's not straight after the weeks, but 90% of the CME charts do get filled. So, and Boris was saying it is still in a downtrend here. You can see how price is just respecting this this trend line. So, nothing looks bullish here, to be honest.
Yeah.
Yeah. So there is 9 minutes until Powell starts speaking. So when he starts speaking, we'll actually start playing it. And obviously, it's about his tone. He won't reveal anything, but it's about how he expresses what's going to happen with in the next couple of months in terms of rate hikes. So it's going to be very important to keep an eye on that. So we will be commenting on what he's going to say, just so you guys don't get lost, because it can be a bit confusing.
You know what else I'm just thinking is that with and I don't mean to get a little bit political here, but with the upcoming U.S. elections in 2024, perhaps Powell does have an incentive to keep interest rates at least where they are, or maybe even lower. What do you guys think about that?
I'm not sure.
Because that would be
That's a good
bullish
question.
for the markets,
Yeah,
It would be.
So
yes.
maybe
Yeah.
there is some kind of pressure from him, from his higher ups, to not like completely destroy the equity markets by raising interest rates too much. But something to think about.
I think if he's open to maybe future rate hikes, I think that would be pretty negative for cryptos. A lot of potential headwind for, I guess, riskier asset classes like cryptos. So I think a lot of investors would definitely have to reassess their risk exposure if that is the case. If he does mention, "Hey, we're open to additional rate hikes down the road."
yeah. I mean,
Yeah, I'm watching.
yeah,
I'm reading the Live Squawk Twitter feed, and it said that Fed swaps no longer consider 2023 rate cut likely. So I guess that means either they're gonna keep rates where they are, or perhaps start hiking them again for the next Fed meeting. So maybe that's why we had that initial bearish reaction in the equity markets.
it's quite interesting. I'm reading all the comments on the YouTube for Powell, and everyone's just, yeah, they don't know what they're saying. The one guy says kangaroo market. I don't know what that means.
Yeah, I don't think most people are a fan of Jerome Powell. At least I've never met a person who
Yeah,
is a
I'm not.
fan of him.
And he does look a bit evil too, with his with his eyebrows.
Yeah, he's pretty much like the ruler of the world,
Yeah,
as far as I'm concerned.
literally. If you look at the volume for Bitcoin, it's not as big as what happened on the 5th of June. They must have. Let me have a look here. 5th of June. Nothing. That's interesting. Yeah, I mean, looking at the agri-trade chart, it's kind of just consolidating a bit. So I think we just need to wait for 5 minutes until we see what Powell's going to say. So it's going to be very interesting. So make sure you guys wait for this. He normally speaks for 15 to half an hour, and we should know what he starts to say in terms of his tone. So we will keep you guys updated. We won't, because he can get a bit confused in terms of how he describes what he's saying.
Chris, what are you guys' thoughts on just the crypto market, like just this coming year, just given all the stuff that's happening with the SEC? It seems to me, it feels like a lot of investors and traders have kind of like left the market, and that's why we're seeing like so little volatility. At least in Bitcoin and Ethereum, they're not really moving much. Just complete sideways. It's kind of very hard to trade.
Yeah, I remember Boris and
Bitcoin and Ethereum.
Boris and Eric, you guys were saying, I think the other day, the liquidity in the market is just not there. I was looking at it today, and there was quite a big drop, and there was no volume. So I just feel like there's just no more liquidity in terms of, I don't know if it's with futures or spots, but yeah.
I think a lot of, at least US users, are getting very negatively impacted by whatever's happening right now through the SEC. I think US participation in cryptos could, at least for this upcoming rest of the year, could decrease a bit. But that's simply because I'm coming from a regulatory perspective. Who's to say there's some other, other country that could buy up the price of Bitcoin themselves, So that's what's so great about
cryptos. It's decentralized and yeah.
I actually heard one of Russia's like major banks is going to allow crypto trading over the weekend, which is very interesting because Russia has had a very strict anti-crypto, anti-Bitcoin policy. So, yeah, I don't know. That's going to be very interesting.
So there is 2 minutes. So in 2 minutes time, we're gonna actually play the video. It's a live stream of Powell speaking about his opinions on the next couple of months. So that will happen soon.
Yeah, I can't wait. I've been waiting. I couldn't sleep last night just waiting for Powell to speak.
Yeah.
It's going to be so exciting.
Yeah, sure. We'll let you know if it favors the dollar. But at the moment, we just need to wait. And let's actually take a look at the dollar again. See if it's still going up. Yeah, this is crazy. The dollar is moving so much. So the dollar within this 30-minute candle, let's take the 30-minute candle out. It's moved up 0.5%. The thing is with Bitcoin, like I think like last year when it was strongly correlated, we would have seen a massive drop for Bitcoin if the dollar is moving 0.5%. So it's quite interesting that it's not really correlated anymore. I was looking at gold as well, still going down.
It's interesting because silver is up for the day.
Oh, really? Yeah, also the S&P 500 is down. Well, that's expected. Yeah, so there's one.
Silver's actually up 1%. Like gold's just kind of flat right now.
Yeah, it's because gold went up quite a lot in PPR, and it's just basically retraced all the move of what it did in PPR.
What did the PPI report actually say? Because I missed that.
Yeah, it was negative.
Okay.
For the dollar. But there was also it was neutral as well. So I'll grab the numbers now. Yeah, so the core PPI month to month was the forecast was 0.2 and the actual was 0.2. And then the PPI month and month, not the core one, the forecast was negative 0.1 and it actually came out negative 0.3. So it was more negative. But the thing is with gold reacts a lot more to news than other asset classes, commodities. Okay, yeah, so it's live right now. So let's have a look. I'll put it up.
I'm watching the Yahoo Finance live stream where Jerome Powell's going to speak in the live chat. It's like crazy. Like a lot of people are talking about Bitcoin, and it's just a flood of comments. Seems like people from like Wall Street Bets or something.
Yeah, so we're just currently waiting. So if you guys did just join now, I'm gonna go back to the copy trading section just so you guys know that we are copy traders on CoinW. And obviously, if you need the link, it is in the description. So this is Boris, and you can see on the top here. I'll go back to that. Powell's about to speak.
Oh, here he comes.
So this is pretty much what we've been waiting for.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal.
Okay.
Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We have raised our policy interest rate by 5 percentage points, and we've continued to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. In light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, today we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings.
Unchanged.
Looking ahead, nearly all committee participants view it as likely that some further rate increases will be appropriate this year to bring inflation down to 2% over time. And I will have more to say about monetary policy after briefly reviewing economic developments.
You guys
The U.S.
watching?
economy slowed significantly last year, and recent indicators suggest that economic activity has continued to expand at a modest pace. Although growth in consumer spending has picked up this year, activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. In our summary of economic projections, the median projection has real GDP growth at 1.0% this year and 1.1% next year, well below the median estimate of the longer run normal growth rate.
It's not good.
The labor market remains very tight.
Yeah, normally
Over the past 3
above
months,
that, right?
payroll job gains averaged a robust 283,000 jobs per month. The unemployment rate moved up but remained low in May at 3.7%. There are some signs that supply and demand in the labor market are coming into better balance. The labor force participation rate has moved up in recent months, particularly for individuals aged 25 to 54 years.
Okay.
Nominal wage growth has shown signs of easing, and job vacancies have declined so far this year.
Yeah, so at the moment,
While
he
the
hasn't really
jobs to
said
workers
anything,
gap has declined,
about the
labor
rate
demand
increase.
still
He's more just
substantially
saying stuff
exceeds
about
the supply of
labor
available
market, and
workers.
so we still need to wait until
FOMC participants expect
he
supply and
actually
demand
starts
conditions in
speaking
the
about
labor
something
market to come into
important.
better balance over
So we'll
time,
let you know when that happens.
easing upward pressures on inflation. The median unemployment rate projection in the SEP rises to 4.1% at the end of this year and 4.5% at the end of next year. Inflation remains well above our longer-run 2% goal. Over the 12 months ending in April, total PCE prices rose 4.4%, excluding the volatile food and energy categories. Core PCE prices rose 4.7%. In May, the 12-month change in the consumer price index came in at 4%, and the change in the core CPI was 5.3%. Inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go. The median projection in the SEP for total PCE inflation is 3.2% this year, 2.5% next year, and 2.1% in 2025.
The PCE wouldn't affect the
Core
price, right?
PCE inflation, which excludes volatile food and energy prices, is projected to run higher than total inflation, and the median projection has been revised in the SEP up to 3.9% this year. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5 percentage points. We have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, especially housing and investment. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. The economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. In light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5 to 5.25%, and to continue the process of significantly reducing our securities holdings. As I noted earlier, nearly all committee participants expect that it will be appropriate to raise interest rates somewhat further by the end of the year. But at this meeting, considering how far and how fast we've moved, we judged it prudent to hold the target range steady to allow the committee to assess additional information and its implications for monetary policy. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. In our SEP, participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.6% at the end of this year, 4.6% at the end of 2024, and 3.4% at the end of 2025. For the end of this year, the median projection is a 0.5 percentage point higher than in our March projections. I hasten to add, as always, that these projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do at the Fed is in service to our public mission. We will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
That's interesting. Go ahead.
Interesting.
Thank you. Colby Smith with the Financial Times. I'm curious what gives you and the committee the confidence that waiting will not be counterproductive at a time when the monthly pace of core inflation is still so elevated. Interest rate sensitive sectors like housing, while they felt the drag of the past Fed actions, have started to recover in some regions, and financial conditions, most recently were easing.
So I guess I would go back to the beginning of this tightening cycle to address that. So as we started our rate hikes early last year, we said there were 3 issues that would need to be addressed kind of in sequence. And that of the speed of tightening, the level to which rates would need to go, and then the period of time over which we'd need to keep policy restrictive. So at the outset, going back 15 months, the key issue was how fast to move rates up, and we moved very quickly by historical standards. Then last December, after 4 consecutive 75 basis point hikes, we moderated to a pace of a 50 basis point hike, and then this year to 3 25 basis point hikes at sequential meetings. So it seemed to us to make obvious sense to moderate our rate hikes as we got closer to our destination. So the decision to consider not hiking at every meeting and ultimately to hold rates steady at this meeting, I would just say it's a continuation of that process. The main issue that we're focused on now is determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time. So the pace of the increases and the ultimate level of increases are separate variables. Given how far we have come, it may make sense for rates to move higher, but at a more moderate pace. I want to stress one more thing, and that is that the committee decision made today was only about this meeting. We didn't make any decision about going forward, including what would happen at the next meeting, including we did not decide or really discuss anything about going to an every other meeting kind of an approach or really any other approach. We really were focused on what to do at this meeting.
So there was no kind of initial debate about the possibility of July, any sense of the initial support at this stage?
Actually, this would be bearish, right?
So again, we didn't make a decision about July. I mean, of course, it came up in the meeting from time to time, but really the focus was on what to do today. I would say about July, two things. One, decision hasn't been made. Two, I do expect that it will be a live meeting.
Thanks, Howard Schneider with Reuters. I was just wondering if you could help us understand the narrative here, because it feels like there's been a level shift in the dots, stronger GDP, less of a hit to unemployment, slower progress on inflation. And I'm wondering, in this sort of, where's the disinflation coming from?
Sure.
The labor market's going to be stronger, it looks like. It's not coming from there. Demand's not coming down all that fast, according to GDP. You've doubled your estimate of GDP. So what's the narrative here? It seems like it's getting more immaculate rather than more messy.
So you're right that the data came in, I would say, consistent with, but on the high side of expectations. So, and if you go back to the former SEP, the last SEP in March, you will see that growth moved up. These are not huge moves, but growth estimates moved up a bit. Unemployment estimates moved down a bit. Inflation estimates moved up a bit. And, you know, all three of those kind of point in the same direction, which is, you know, that perhaps more restraint will be necessary than we had thought at the last meeting. So although the level, frankly, is pretty, the level of 5.6 is pretty consistent if you think about it, where the federal funds rate was trading before the bank incidents of early March. So we've kind of gone back to that. So your question is, where's the disinflation going to come from? And, you know, I don't think the story has really changed. The committee has consistently said and believed that the process of getting inflation down is going to be a gradual one. It's going to take some time. And I think you go back to the three-part framework for core PCE inflation, which is, we think, as good an indicator as you can have for where inflation is going forward. You start with goods. With goods, we need to see continued healing in supply side conditions. They've definitely improved a substantial amount, but if you talk to people in business, they will say it's not back to where it was. So that's one thing, and that should enable goods prices to continue, goods inflation to continue to come down over time. In terms of housing services inflation, that's another big piece, and you are seeing there that new rents, new leases are coming in at low levels, and it's really a matter of time as that goes through the pipeline. In fact, I think any forecast that people are making right now about inflation coming down this year will contain a big dose of this year, and next year will contain a good amount of disinflation from that source, and that's, again, probably going to come slower than we would expect. That leaves, you know, the big sector, which is a little more than half, pardon me, of the of core PCE inflation. That's non-housing services, and, you know, we see only the earliest signs of disinflation there. It's a sector, it's a very broad and diverse sector. I would say in a number of the parts of that sector, the largest cost would be wage costs. It's the service sector, so it's heavily labor intensive. And I think many analysts would say that the key to getting inflation down there is to have a continuing loosening in labor market conditions, which we have seen. We have actually seen, you know, I go through a number of indicators suggesting there's been some loosening in labor market conditions. We need to see that continue. I would almost say that the conditions that we need to see in place to get inflation down are coming into place, and that would be growth meaningfully below trend. It would be a labor market that's loosening. It would be goods pipelines getting healthier and healthier and that kind of thing. The things are in place that we need to see, but the process of that actually working on inflation is going to take some time.
Yeah, I mean, I've got a chart here for Bitcoin, and it's coming up a bit. So I'm looking at a potential retest of 26,000, and then
Nick Timrose, the Wall Street Journal.
Sure.
What's the value in pausing and signaling future hikes versus just hiking now. I mean, not to be flippant, but I don't lose weight just by buying a gym membership. I have to actually go to the gym. 16 of your colleagues put down a higher year-end 23 rate today. The majority of you think you're going to have to go up by 50 basis points this year. So why not just rip off the Band-Aid and raise rates today?
So first I would say that the question of speed
Interesting question.
is a separate question
Yeah,
from
that
the
was-
question from that of level. Okay, so and I think if you look at the SEP, that is our estimate, our individual. It's really accumulation of our individual estimates of how far to go. I mentioned how we got to those numbers. In terms of
So make sure you
speed,
pay
it's
attention
what
to
I
the
said at the
question.
beginning, which is speed was very important last year. As we get closer and closer to the destination, and according to the SEP, we're not so far away from the destination in most people's accounting. It's reasonable, it's common sense to go a little slower, just as it was reasonable to go from 75 basis points to 50 to 25 at every meeting. And so the committee thought overall that it was appropriate to moderate the pace, if only slightly. And there are benefits to that. So that gives us more information to make decisions. We may try to make better decisions. I think it allows the economy a little more time to adapt as we make our decisions going forward. And we'll get to see, we don't know the full extent of the consequences of the banking turmoil that we've seen. It would be early to see those, but we don't know what the extent is. We'll have some more time to see that unfold. I mean, it's just the idea that we're trying to get this right. And this is, if you think of the two things as separate variables, then I think that the skip, I shouldn't call it a skip, the decision.
I don't know if what he's
makes
saying
sense.
is true.
I know you said July is live with only one June employment, with only the June employment and the CPI report for June due to be released before the July meeting. You get the ECI after, you get the senior loan officer survey after, you get some bank earnings at the end of next month. What incremental information will the committee be using to inform their judgment on whether this is in fact a skip or a longer pause?
Well, I think you're adding that to the data that we've seen since the last meeting too. Since we chose to maintain rates at this meeting, it'll really be a 3-month period of data that we can look at. And I think that's a full quarter, and I think you can draw more conclusions from that than you can from any 6-week period. We'll look at those things. We'll also look at the evolving risk picture. We'll look at what's happening in the financial sector. We'll look at all the data, the evolving outlook, and we'll make a decision.
Thanks for taking our questions. 𝗕𝗓𝗪𝗓, New York Times. You obviously in your forecasts marked up the sort of path for growth, marked down the path for unemployment, marked up the path for inflation pretty notably. I wonder, since March, what has changed to make you think that the economy is a lot more resilient and inflation is going to be a lot more stubborn? And given that, why do you feel confident that this is as high as you're going to have to revise the federal funds rate, or do you think it's possible we could have even a higher than 5.6% terminal by the end of this cycle?
I mean, on the first part, I just think we're following the data and also the outlook. The economy the labor market, I think, has surprised many, if not all, analysts over the last couple of years with its extraordinary resilience, really. It's just remarkable. And that's really, if you think about it, that's what's driving. It's job creation, it's wages moving up, it's supporting spending, which in turn is supporting hiring. And it's really the engine, it seems, that is driving the economy. So it's really the data. In terms of, we always write down at these meetings what we think the appropriate terminal rate will be at the end of this year. That's how we do it. It's based on our own individual assessments of what the most likely path of the economy is. It can actually in reality wind up being lower or higher. And there's really no way to know, but it's what people think as of today. And as the data come in, it can move around during the intermeeting period. It could wind up back in the same place, but it really will be data driven. I can't tell you that I ever have a lot of confidence that we can see where the federal funds rate will be that far in advance.
Yeah, so I think currently, what are your thoughts, Boris, on what he's saying?
Yeah, it seems like he's not really saying that much. He's kind of like dodging the hard questions, as he always does. yeah, like he said that, inflation remains well above the 2% goal. Inflation pressures continue to run high. Getting back to 2% has a long way to go. Inflation has moderated somewhat, that's what he's been saying all of the past Fed meetings. And, it'll take time for full effects of monetary restraint to be realized. The only interesting thing that he said is that in terms of like future Fed projections, they have not made a decision. So he kind of like left that in the air.
Yeah.
So that's
Yeah.
interesting. Other than that, I don't think there's anything like interesting or really mind blowing that he said. Really.
Yeah, I think he did mention that they thought about implementing future rate hikes, in the coming
Yeah.
months. I personally believe, I think that's a bit of a bearish tone for cryptos, especially. I think,
Yeah, I agree.
especially if interest rates rise, traditional investments are likely to increase, in my opinion. I think the attractiveness of cryptos as an alternative is just going to go down. Yeah, there could be downward pressure from this.
Like he did say like at a rate hikes at a moderate pace in terms of throughout the year. So like I mean in the last one he didn't say anything like that, am I right? In terms of raising rates
I
at a
don't remember.
yeah. So I mean that's also why I'm also quite bearish, because I mean he did say that there will be definitely rate hikes, which is obviously not a good sign.
But he did say like in 2024, he wants interest rates to be like, I forgot what the exact number was, but it was like 5%.
Yeah,
I mean,
exactly.
3.5. So that would suggest they would start decreasing, I guess, like later this year or early next year.
Yeah.
So I guess that's a bullish thing long term.
Yeah, I guess so.
If this is like the peak of the interest rate hikes, then maybe we'll have a bullish outcome from this. Or, I mean, because so far, I think the Nasdaq has actually recovered somewhat from the initial.
Yeah.
It's pretty much back
unchanged.
Right where it was. Yeah.
But also Bitcoin. I mean, Bitcoin pretty much back at where it's been.
25.9. Yeah.
Yeah.
Strange bone. Very quiet.
So, and the dollar's like jumping again.
Yeah. So I mean, like
pretty typical.
Looking at Bitcoin now, I mean, like you can kind of just still trade the breakout in terms of range. So like if it breaks 26 and 50, I would maybe go long back up to 26,200, like in terms of short-term trades. And then if we break the lows at 25,800, you could look at taking profit at 25,600. But I mean, at the moment, like in terms of what he said, we can't really take much from it. Obviously, it could be bearish in terms of what he was saying about the rate hikes and keeping it going at a moderate pace. But there's also other factors involved. So I mean, at the moment, it's still range bound. Bitcoin didn't really react too much. Obviously, the first couple minutes it did. But if you guys have any questions, make sure you put it in the chat, and we can answer your questions. But yeah, overall, like the last FOMC meeting wasn't that intense in terms of volatility. We normally see a lot more volume and volatility. Obviously, in the first couple minutes there was. But normally when Powell starts speaking, we do see, a few wicks to the upside and downside, but obviously that didn't happen.
It's kind of a boring meeting.
Yeah.
Unless he says something crazy in the next 5 minutes.
So yeah, next time I just want him to say something like off script or, and then and then we'll see some movement.
Yeah, I feel like the monthly CPI reports have a lot more volatility now than the Fed meetings.
Yeah, exactly. Even PPI, like PPI is not even what it is, I guess. But yeah, if there's no other questions, I think we can start looking at ending the stream. So thoughts on Bitcoin at the moment, looking for potential long on the breakout on 26K. Back up to 26,300, and then a potential short below 25,800, back down to 25,600. But if you look on the 4-hour chart, well, then you can see that 25,600. Once we see a candle close below there on the 4-hour, well then that 24,500, 25K level is a good level to look at for potential long, in my opinion. And your guys, what's your thoughts before we close?
Just more sideways. Like,
Yeah.
Bitcoin's pretty
Very
much
much
unchanged
so.
for the day, and
Yeah.
we're just I don't know, very boring market. So for
Yeah.
me as a trader, I mean for you guys as well, it's kind of tough to like make money in this kind of environment, especially for me because I'm like more of a trend following trader, and there's just no trend, at least not in Bitcoin or Ethereum. So
Yeah. So I
Yeah.
think, the fact that Bitcoin remained unchanged after the recent FOMC today, I do think that there could be some potential retracements higher for a lot of the altcoins that have been selling off, because I think people are more inclined to be a little safer in that regard by putting money into altcoins instead of anything else.
Yeah, I agree. Cool. Yeah, so thanks again, guys, for joining. Obviously, it wasn't as exciting as we thought it would be, but yeah, remember, guys, to look at the CoinW app. It is in the description, and to follow Eric, Boris, or myself. So it depends on the strategies that you guys would want to implement. So you can come here and click on copy trading at the top, and then click on either Boris, Eric, or I. So yeah, thanks again for joining. I do appreciate everyone for staying this long. I know it was a long live stream, but yeah, I do appreciate if you guys do subscribe and put the notification bell on the YouTube channel, as you'll get notified for any updates that I provide, and we will be doing a lot more live streams in the next couple of weeks. So yeah, thanks again,
sure.
guys, for joining. I appreciate it.
Thanks, guys.
Yeah, thank you for having us.
Yeah,
And
awesome.
yeah, it was a really fun one. And yeah, like Dylan said, just check us out on the copy trading platform on CoinW. And yeah, safe trading, guys.
Yeah, awesome. Cheers, guys.
Cheers.
All right, later.